Good evening and welcome to Money Matters. My name is Pat Welde with Merrill Lynch. My co-host this evening is Patricia Dunn, also with Merrill Lynch. Pat, how are you?
Good to see you again.
Good to see you. Well, we do have a special guest coming with us very shortly. Stay tuned. Who's going to help small businesses out there accelerate their sales. Pat, let's talk about what we do on a daily basis. I know you're talking to clients every single day. What are some common concerns that you're hearing from clients?
A couple of things have come up. Most recently, of course, is taxes. Mm-hmm. They fully anticipate that this tax season, 2015 tax season, is going to be one of the roughest tax seasons we've had in a while. The additional Obamacare taxes, the fact that last year money managers were doing so much trading to put their numbers up each quarter while the market was relatively flat.
Right.
We didn't get our big move in the market till the fourth quarter. So they're very concerned about that. They're also questioning what kind of year are we going to have this year? And I'm telling them to look at for 6 to 8%. I'm not looking for it to be a big bang up year.
Mm-hmm. Well, bringing that, we're only several weeks into the new year, but I will tell you we've had unusual volatility so far this year, and even last year, the second half of the year was quite volatile. How are clients feeling about that, and what are you doing to help clients with that?
That's a very good question. You're right. The volatility really stepped up in the fourth quarter after essentially 3 years that were not volatile.
Right.
And we got spoiled.
Yeah.
And so far this year, I think through February 6th, the market's up 0.21%. It's essentially flat, but you wouldn't know it from the daily headlines. It's up 300, down 300.
I mean, in the first 30 trading days of the year, we've actually had 22 days where the move on the market's been more than 1%.
Exactly.
Up or down. So it's, it depends on what day you see or what day you miss. You're either scared or happy one way or the other, but it's kind of flattened out, through here.
So I'm basically telling people that it's got to be a year where you grit your teeth.
Mm-hmm.
If you have extra money, buying on dips is good. But when you're thinking for the long term, like I'm trying to get net worth from point A to point B,
right,
just grin and bear through it.
Yeah, I think that's one of the challenges. I mean, in this marketplace is what else you're going to do with your money. I mean, the reality is interest rates, around the world are just incredibly low. Mm-hmm. We're at lifetime lows in yield. So, for the riskless investor, the investor that doesn't want to deal with this volatility or that crazy market, unfortunately they're in a bad spot because this is the worst time in history to be a riskless investor because your return is zero.
You're absolutely right.
So how are you helping clients with that?
Basically, I've been encouraging my clients to figure out what a year, maybe a year and a half's worth of expenses is, mm-hmm, and leaving that money in cash and then investing the rest of it for a more long-term perspective. Mm-hmm. Because with the exception of dividend-paying stocks, there isn't any yield to be had.
Right. And even the yield that's out there, I mean, I think people really need to be careful, and remember that, that rule of thumb that interest rates and prices of your fixed income or bonds are going to move in opposite directions. So that if we do get, a move up in rates, which we haven't in a very, very long time, but if we do get it, their bond portfolios could be at risk. And I think many are not prepared for that.
No, they're absolutely not prepared for that because we've had 30 years of declining interest rates.
Yeah.
So we're talking a whole generation that hasn't seen anything but falling interest rates.
Exactly.
And it's going to come as one heck of a surprise when they see their bond portfolios decline in value.
Yeah, and I think the scarier point is what kind of bonds you have or where are your bonds, because I talk to clients all day, every day about as long as we own the bonds, we have a maturity.
That's right.
Although my bonds or my clients' bonds will suffer price declines like others, I can choose prudently not to do anything about it and just wait for maturity if you have it structured properly. My concern is for people that own bonds in mutual funds where they really don't truly know what they own. And when that floodgate turns and other people have bad behavior and start selling because of the losses, albeit temporary, when they sell, they're going to sell my bonds if I'm in that mutual fund too, and it turns into a permanent loss of my capital. That's my concern.
You're absolutely spot on, Pat, because money gets into motion.
Right.
When things happen, if you own a mutual fund, you don't own the individual bonds, you don't have that luxury of just waiting it out till the bond matures.
Right.
Money starts exiting the mutual fund. Portfolio manager is forced to liquidate.
Right.
The other holders are put in a position where they're accepting these losses. And if they too don't move out and move into something else, that's a real loss.
Yeah.
And then, of course, where does that money go? It has to go somewhere.
Exactly.
And it's likely to go into the stock market, particularly chasing stocks that pay dividends. So I think we could see quite a rally in the stock market as the bond market declines.
If that should occur, I think that could occur. Do you have time for a viewer question, Pat?
I do.
I have a question from a Jason Lippman of Ardmore who asks, how do you sell short?
Well, very good question.
Carefully.
Carefully, very carefully. You and I have talked in the past about the three different models that are currently available in the professional advisory role. And so the first question as to how to sell something short is, who do you go to sell something short?
Right.
And the three models are your professional, your traditional stockbroker, who is interested in buying individual stocks and individual bonds with the idea of hopefully finding the next big winner. Your financial advisor, who applies science to a portfolio and typically uses professional money managers. Now, both your traditional stockbroker and your financial advisor are market-centric. They are trying to beat the market for their clients. And the third one is what you and I are, wealth management advisors, where we are investor-centric and we're trying to move that net worth from point A to point B. And we take a long-term, holistic view.
Right.
So the answer is, who do you go to? Any of the three is qualified to do a short sale.
Right.
But you're not likely to get a positive reception from the idea from a wealth management advisor. You're better off going to a financial advisor or a traditional stock broker.
Because it's more of a trading technique, basically, where you're betting a stock is going to go down as opposed to going up.
Right. And what is a short sale? Well, a short sale is selling something you don't own.
Right.
And you are betting that that stock is about to go through a big decline. Let's make something up here. Let's have stock XYZ and the stock's selling at $30 a share.
Right.
And you call up your traditional stockbroker or your financial advisor and you say, I'm convinced the stock's going to go down. I want to sell it short. And you put in the order and you've sold it at $30 a share.
Right.
Now, either of two things are going to happen. Stock's going to go down and you're going to be right. And the most you stand to make, profit-wise, is from the point where you sold it all the way down to zero. So let's assume then you're right. The stock goes from $30 to $20. You call your stockbroker back up and you say, it's not dropping anymore, Pat. I think we should complete the transaction. The stockbroker goes in and buys the stock, and the profit that you've walked away with is $10 per share.
Right.
That's the good news scenario. The bad news scenario is you're wrong. And you sell it at $30 a share, and it goes to $50 a share.
Right.
You can't leave it out there. You have to complete the transaction.
Right.
So at some point, your stockbroker is going to call you and say, let's cut your losses. We buy it back at $50. You've now lost $20 per share.
It's dangerous.
It's very dangerous.
Be careful, Jason, is Pat's message to you. For those that have questions, we're now going to show you how you can send us your questions, and hopefully we'll get you answers to those questions.
you can have your questions answered on Money Matters, please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our hosts and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, M-O-N-E-Y, -matters, M-A-T-T-E-R-S, TV.com.
Thank you again, Jason. Hopefully that was helpful to you. Well, I now want to introduce our special guest tonight, Mr. Charlie McDermott from Turnkey Sales Solution. Charlie, how are you this evening?
Great. How are you doing, Pat?
Doing fantastic. Well, we're glad to have you in the studio here to talk to some of our viewers. Why don't you tell us a little bit about Turnkey Sales Solutions?
Sure. You know, we are a company who helps small business owners generate all the leads they can possibly handle. And that may sound a little odd and strange and all, but you know what I found is that the restaurant owners tend to like to do the restaurant thing and cook and not necessarily market and bring in clients, and that goes for just about all businesses. You know, we weren't brought into the business world typically with the skill set that we need to bring in customers. So we fill that void and help them fill their seats in their restaurants or their businesses and beyond.
We were talking earlier, and you were telling me about how most small business owners are still kind of guessing, you know, about what makes sales growth, and they're kind of missing some real hard data.
Yeah.
Why don't you talk to us about that?
You know, Pat, I was in the health club business for 23 years, and this was I sold my business in the early 2000s, and that was pretty much before websites, and we were just getting websites going, and back then, heck, my first club I started without even a computer, which was hard to believe. Can you imagine running a business without a computer? So it was very difficult to really track the effectiveness and the return on your investment for your marketing, whether it be direct mail. Nowadays we have the whole internet thing, and what exactly is working, what isn't working. So typically when I meet with business owners, the response to this is, well, I think it's working, or I don't think that's working, or what do you think about my website? And someone will say, hey, it looks good, and other people will say, well, you know, I don't like this, I don't like that. But the reality is they really don't know. They can have the best website in the world, but it could look like a train wreck.
Right.
But it might be converting like a slot machine that's, you know, just broken and throwing out money.
Right.
So they go ahead and make changes, and then a month later they're going, oh, my sales are down. I don't know what's going on. It must be the economy. No, you know. So you now have tools that you can, you know, track the response rates, both of your online and your offline marketing. So you know exactly what's going on, as an example, on your website. You know, wouldn't you like to know what people are clicking on and what pages they're spending time on? And you can then kind of game the odds in your favor to get more phone calls, to get more clicks on your website. And you can do the same thing with your direct mail pieces and everything you put out there, whether it be display ads, newspaper ads, coupons, by simply putting tracking phone numbers on. So you know exactly, again, what people are calling on. You know, back again, my health club business, we always asked our customers, how'd you hear of us? Right. Mm-hmm. And they typically, and we did a lot of things, everything from TV to, you know, the usual suspects, newspaper ads and all that. And they would typically go, you know, I'm not sure. Right. Or they would just guess.
Yeah,
sometimes they would say TV, and it's like, well, we haven't done a TV commercial in 3 years, you know?
Right.
And so you're back to, we don't really know. Well, there's no reason to do that anymore. We know exactly, for our clients, we know exactly where the leads are coming from because we track phone numbers and we track websites and all that data. And then now at the end of the month, the end of the quarter, we can look at those numbers and say, hey, this is working. Let's double down on this media. Right. This isn't working. Well, why isn't it working? Yeah, maybe we don't want to cut our losses yet, but maybe we at least now know and say, what can we tweak? We can do a better offer, or we could change the copy and do a different headline and all that. So so that's the big difference nowadays versus you know, not too long ago, really.
Well, the question that I hear most often is, how do I get moved up on the Google list so that they hit my website before they hit my competitor's website? What's the secret?
Huge, especially for local businesses. You know, if you have a slot on page 1 of Google, and ideally above what we call above the fold, the top listing, so when you're on your computer you see that the top listings, you don't have to scroll down, people are going to call. You're going to get more phone calls, you're going to get more clicks to your website. So that's obvious. The question is, how do we get there, right? And there's this thing called SEO, which stands for search engine optimization, and it's just like very, again, when I mention that to small business owners, their eyes kind of glaze over. And the bottom line is there's one key ingredient that Google looks for, and it's called the experience. All Google wants is for their customers, who are the people searching for the pizza shop or the hair salon, to get the right experience. And they know what the right experience is based on a number of different things. Time they spend on the website. If they're spending more time on your website instead of your competition's, then Google is going ding, 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 there's something going on here. It's good. Our customers are staying there. They must like it.
Move that up. So
Yep.
that's what they move that up.
So
Okay.
that's part of the experience. So more time spent on the website. I call Google and the other search engines a big dumb computer, because that's really what they are. Garbage in, garbage out. You've got to tell the big dumb computer exactly who you are and what your keywords are. So there are things on your website that you just need to tell Google. If you're a plumber, you need to instruct Google that this page is all about, leaky pipes in Philadelphia. So when someone's searching how to fix a pipe, they end up on your website. Your page shows up. So it's time on the website. It's number of pages they visit on the website. Again, all about the experience. If I'm getting great information from your website and I'm going from page to page to page, Google is saying, okay, they're looking at 1.3 pages on your competitor's website, but on your site they're looking at 3 pages. That's it to your benefit. So
Okay.
it's in one way can be very complicated, but in another way it's very, very simple. It's make sure you have on your website what people are looking for. So Charlie, what do I need to have? And the answer is, for many businesses, just great content, even good content. So think about, what is your customer searching for? How-tos, is often the great way to start, because many people are nowadays Googling how-to. They get on YouTube, how-to, right?
Yeah.
So put that information on there and help people understand, even if you're giving away the farm. Oftentimes, one of the strategies we use in business is tell people how to do things. And what you find out is at the end of the day, they really don't want to fix a leaky pipe.
Right.
They don't really want to cut their own hair. But they start there oftentimes, and then they go, well, this is great content. And then they build a relationship with that business, and when they make the decision to buy, which is often sometimes 1 to 2 years, who are they going to call? Who are they going to stop and see? And it's the one they have the relationship with. People buy people.
That's right.
They don't buy products. They don't buy services. So
I'm sure that topic really is fascinating to our viewers, and if we have time, I'm going to come back to that. But I want to shift gears. I know you had a lot to talk to us about.
I always have a ton.
How about, that's online. How about offline? How do you turn more dollars into people's offline activities?
Yeah. Well, number one, it's there's a lot of clutter out there. I'll often put up a slide of Times Square and show all the everything that's going on in Times Square, and
Unbelievable, isn't it?
Mm-hmm.
that is typically a challenge we'll have. We get hit by, you hear so many different numbers, but somewhere around 7,000 ad impressions a day. So the question is, how do you stand out? And you think about it, driving to work, you've got the radio commercials, you've got the billboards, you've got things that you don't even realize in your peripheral vision.
That's true. You don't think about it.
In many
Buses
cases.
now with the ads.
I mean, it's everywhere.
ads everywhere.
Car wrecks, bumper stickers.
Yeah.
So 7,000 is probably a low estimate, but let's just go with that. So the question is, how do you stand out? And how do you represent your company differently than everyone else? I mean, you guys see it in your world, financial planners, you struggle with that. Realtors struggle with that. The average Joe business owner struggles with that, and oftentimes they just fall into doing what everyone else is doing. So step number one with both online and offline is differentiate yourself, and you do that with what I call the fundamentals. USP, unique selling proposition. What makes you different, unique, that you stand out versus your competition? And there are a lot of different ways of doing that, but at the end of the day, it's know who your target audience is. And if you're speaking to, I often say, hey, if you have two choices, you figure out who your target audience is, and give that person a name. So, it's Mary, and she's 35 and drives a car and has a Mercedes and has 3 kids and lives in a $450,000 home, and on and on and on. Her hobbies and all that.
Right.
And then you have a complete stranger. You have to write a letter. Which letter is going to be a heck of a lot easier to write?
Right.
Mary's.
Yeah. And that's the difference. When you know who your ideal customer is, creating marketing collateral becomes a heck of a lot easier.
Right.
Yeah. Makes
And
sense.
so the tip for the audience is just understand, if you're going to figure out what makes you different, what makes you unique, and then secondly, tailor that message to your target audience. But Charlie, I want the whole pie, not a piece of it, and that's what you have to fight against. What you think is logic, it's not, because everyone's fighting for the big pie and they're getting none of it. You're going to spend a lot less money in marketing. You're going to get a huge return, and you're going to now resonate. So when someone is in Times Square, they're going to see your message and not just a blur of 7,000 messages, because now I'm speaking exactly to my target audience. I'm speaking in the words that in my case, she would understand.
Right.
And guess what? They're going to now be attracted to me, and I'm not chasing business, which is pretty standard for most business owners.
Well, earlier, Charlie, we were talking, and you threw out a number that blew my mind. So I'd like to ask you to speak about it a little bit. That small businesses can leave on the table 97% of their sales?
Yeah.
How do you succeed in business if you give up 97%?
Yeah. That's, as you well know, the reality is most don't. Most businesses fail, and that's the reason. The reason is because everyone is going after, I pull out my credit card if it didn't take a second or two, the person ready to buy now. It's the now buyers. And guess what? They're only anywhere from 1% to 5%. It's the other 95, 97% that are going to buy. They just haven't made that decision yet. All right, so think about it. I bought a car last year. And whether it's a car or a service, there's a period of time, I call it the buyer's journey. All right, so the first phase is when you get excited about that purchase. And I'm thinking about, wow, I'm going to look good in that car, and it's going to look good in my driveway, and it's going to be so comfortable when I drive to Florida, and all those great, exciting thoughts, right? And then the next phase is, why shouldn't I buy it? Oh, I heard BMWs are expensive to maintain. Well, I can get a cheaper car. And so now it's...
talk yourself out of it.
Yeah, we're dealing with the objections. And then it's not until I'm ready to buy do I pick a place to buy that object, that product, or that service. So that period of time could take days, it could take months or years. So the average buyer, the average buying cycle is 1 to 2 years, believe it or not. So most businesses, they can't afford to market to someone for 2 years.
Right.
But if they could, they'd have a lot more sales, because the reality is people forget about you, and it's not their job to remember you could sell them the best product, give them the best service. It's your job. So the answer to that is to just continue to give them great information. And one of the easiest ways to do it, and it's not the only way, but it's to grow your list and collect that data. You can do that online. You can do it when people come into your store, your office, and that's just get their information. Ideally email. So now you have a way to follow up. So there's this thing called an autoresponder series, and you just drip an email to them occasionally over time. Hopefully you do a few other things, but even if you did just that, I guarantee you, you're not going to lose 97% of the sales. Your biggest competition, by the way, is not your competitor. It's no action. People forget. They're excited today, and they lose the enthusiasm because there's so many distractions in life. So if you can re-engage them 3 months later and remind them how great they felt 3 months ago, you're going to pick up that customer. And that can go a long, long way to your bottom
I also
line.
there's a part of your book where you really start talking about how businesses, and this is, I think, it resonates with us, because how do you start businesses from stop competing on price?
Yeah.
I mean, everybody thinks, well, lower's better, lower's the best. But you have some thoughts about that.
It's a slippery slope. I mean, I'm a penny less than you, you're a penny less than me, and before we know it, we're not making any money.
Right.
I was in the health club business, as I said earlier, and I saw my first club I opened in 1984, and our membership was $35, $40 a month. 20 years later, we're competing with Planet Fitness and all those clubs at $10 a month.
Right.
Open 24 hours a day.
Exactly.
Yeah.
7 days a week.
I mean, I'm sure you locked the door at some point at your gym. Now they don't even lock the door, and it's $10.
Right. So I said, I do not want to be in the commodity business. So that's when I developed a $20 million club. We went the complete opposite direction. Said, heck with the $10 a month guys. We want to be a $100 a month club.
Right.
And within a year, we were throwing off $1 million. simply because we completely got out of that market and we bundled services that no one else could compete with. So now we couldn't be lumped in with the gyms and the fitness clubs. We were a full-service, family-oriented, health club that provided all kinds of services. So one of the ways to get around that, and one of them, by the way, is what we said earlier, develop your unique selling proposition. Number two is to bundle services, bundle products. Instead of being an apples to apples comparison, what if you were an apples to orange?
Right.
Right? And now no one can compare you and say, yeah, but the guy down the street will give it to me for a penny less. Well, no, we're not offering what the guy down the street is offering. We're offering this and this and this. And guess what? It doesn't have to cost you any extra money. You can do things. You might have some digital bonuses, as an example, or you could joint venture with other businesses and give them potential customers by offering trials and bonuses with those guys. So there are a lot of ways around that, but you just want to get away from doing the same thing and offering the same product and services as your competitors.
Now, how about knee-jerk reaction marketing? You want to we only have, 2 minutes left?
Knee-jerk reaction, real quick, is I wake up tomorrow and I go, oh, heck.
Yes.
Yes. Our sales are down. We got to do something. And the Valpak guy walks in, the Groupon salesman and says, sign me up. Let's do something. We need sales, right? So at the end of the day, you need a system. And you need a system that can be automated and work for when you're not working 24/7. And that's the bottom line.
All right.
Well, I know our viewers can go to your website, which I encourage them to. I know we've shared some of that information with them, and I think it's just terrific. I really do want to go back and talk just a little bit more about is that one of the services you provide is helping people move up on the Google, and is that something that you can help them with?
Yeah,
I think it's very very much interested for clients.
We actually have a membership base. We do live events in Westchester, and we have members as far away as Australia because of Skype and online stuff. So we can help businesses everywhere. But heck, the local folks, we have events every other month, and on the website you can get all that information.
From your website?
Yeah, and we help businesses get on page one and get more leads, convert better.
Right.
You name it. Yeah.
Yeah, that's. Obviously, at the end of the day, it all starts with sales. So if you can help people increase sales, that's certainly helping their business. And you pointed it out. The reality is most small businesses don't succeed. We hear about the ones that have, but for everyone that has, there's a lot that haven't. And maybe starting with your website and having a conversation with you would be helpful. So we thank you for stopping in.
Absolutely, absolutely.
Well, we do have a next guest for our viewers. Our next guest is Dr. Diane Jurkowski. She's the Chief Medical Officer from Complexa, which is a biopharmaceutical company in the area that deals with inflammatory and fibrotic disease. So, as always, your time is valuable, and we do appreciate you being with us here this evening. Thank you, and your money matters.